Today I want to talk to you about some tips on getting finance in the current environment, because we know that the landscape has changed with APRA intervening sort of 12, 18 months ago to try and take some of the heat out of the property market. But it's a very good time to be playing the long game, buying really great properties in the marketplace. But the biggest challenge people has is around lending. So today I want to sort of talk about a few elephants in the room. And the first one is around finance structure actually matters. If you're just going to buy one property, sure, just get a loan, make a transaction and move on. But I've been doing this for 20 years and I haven't seen too many people retire on a passive income with one investment property. Generally they need 3 or 4, in some cases a couple more. But if you want to play the multiple property game, you're going to have to get multiple loans. And for me, it's important to get the foundations right now. And that might even mean taking one step back to go 2 steps forward. So my advice here is do not be in a hurry. I know that people, once they decide they want to buy, they want to get into the marketplace as quick as they can. But in some cases, the re-engineering and the restructuring of the portfolio means that it may take a little bit more time to get that finance in place. So my advice at this point is to just be patient. Because if you get that right now, what it means is when opportunity strikes, you can actually pounce on that because you have your equity released, you have all of your loans standalone, they're not cross-securitized, and it also means that you have deposits and costs ready to go for the second property and the third property and so on. So my tip here is finance structure really matters and take some time now to get that foundation right. The second thing I want you to think about is to be a good money citizen. And by that I mean, if you are overdue paying your bills, or you're late in making your loan payments, or you go over your limit on your credit cards, even if it's over by $100, it actually matters because you need to respect the rules. And in isolation, it doesn't matter. You know, you go over by $100 and you get a little notification. But in the age of big data, these banks can scrape all of this information and determine your character when it comes to whether or not you're a good risk for a loan. So for me, I'm saying to you to get finance in the current environment, make sure you're a good money citizen. Pay things on time, get auto sweeps on your credit card. Make sure that you've got a squeaky record so that when the bank has a look, they're quite happy with who you are as a risk to them in lending you the money. My next tip is to play the team game. And by that I mean, if you're engaging with a finance professional, whether it's the bank or a mortgage broker, I'm clearly suggesting that you should use an investment savvy mortgage broker. It's certainly my preference. But if you're engaging with a finance professional, keep them in the loop. There should be no surprises whatsoever. And by that I mean, if you're in the middle of an application process and then you go over here and apply for a credit card and then you make an inquiry over here for another credit card, that matters. That actually comes up on your record. And what it does is it puts doubt in the mind of the bank who's assessing your current application. So it's important that you know that this is important stuff when you're through that application process. So it's almost like you've got to quarantine what you're doing and liaise with your professional. And equally, don't let them have any surprises. So, you know, surprise, Monday morning, I bought a property on Saturday and I've got to settle in 30 days. You should have had that conversation prior. Or equally, putting it on your finance professional's desk on the Monday and say, I need you to get me approved to go to auction this weekend. Because what you may find is you might get the quickest option that might not be the best option. But because you've really sort of defined those timeframes and made them really small, you might put your finance professional into a corner. So play the team game. Don't let there be any surprises and let them know as early as you practically can when you're interested in a property. My next tip is that boring is fine when it comes to lending money. And by that I mean, if you are a boring application, that's great. You've lived in the same house for a long time, you're in a stable relationship, you haven't changed jobs for 20 years. As far as the bank concerned, that is a big tick. Versus if you're moving houses a lot, you're in between careers and you're changing jobs, and in some cases, you know, having relationship changes, it kind of leaves the question in the bank's mind as, how do these changes affect the ability for this person or this couple or whatever the borrowing structure looks like? How does it affect their ability to repay the loan? So therefore my tip is, in this environment, boring is absolutely ideal. If you are stable in those same things ongoing, that's a good thing when it comes to finance. And the last thing for me is, I call this tip herding the cats, right? So when we put an application up to the bank, what a lot of people don't know is that that initial application is actually being checked off by the system. You know, has it met all these gates, all these criteria, before it actually goes to a human being. So therefore, as we put this application up to the bank, we need to know that the quality of the application is strong so that we can get through that initial gate so that we can ultimately get to a human to sign off on it. So if we reverse engineer that again, that's the information that you provide to your finance professional is really, really important. So don't give it to them in dribs and drabs. If they requested all of these items that you need to provide, make sure you give it to them in one big batch so that they can put a quality application together, present that to the bank, and give you a better chance of getting your application over the line. So I'd certainly acknowledge that the landscape is well and truly changed, and you need to give yourself the best chance possible for getting your loan approved in this current environment, because the opportunities for me in the next 12 to 18 months to buy really great properties, I think haven't been this good for a long time. But you need to make sure you can get the finance. So have a look at those tips, see if you can implement them, and see if they'll make a difference the next time you submit a loan to the bank.